So you get a loan estimate from a new broker. Well, how do you compare it to the other ones you get? How do you know if they're giving you lower fees? Hi, my name is Matt Coach. I created this YouTube channel to share the tips, tricks, and mistakes on my way to building an 8-figure real estate portfolio. And today I'm going to go over a loan estimate with you guys so you guys can see how you compare loans from different lenders, what they actually control versus what they don't actually control, because there's a lot of things that they can do to manipulate what's inside of that loan estimate, and it does not help you out a lot of the times when they say something's going to cost zero, but they don't actually control that cost. So show you one real quickly so you guys can see it, and you guys won't be hopefully too ignorant when you guys see your loans. Okay, so here's what your second page of your loan is usually going to look like. It's going to break down the costs of your loan. So when you're comparing lenders, this origination charges, this is what they're charging you for the loan. This is the big thing you're going to be comparing other lenders for. Like they could say points here, they could say origination fee, they got application fee, processing fee, underwriting fee. All of this shit doesn't really matter. This is just what you're paying to that lender to get this loan done, or that broker to get this loan done. So this is what you're really comparing, right? This is what they have full control over, and how much they charge for. So, their application fee could be $50 or whatever. This is all the negotiation side of the loan, and how much they're charging. So this is your typical stuff. This should be pretty straightforward. There shouldn't be huge differences here. You're going to pay for something like an appraisal, your credit report, some tax stuff, flood stuff, or whatever things are necessarily for that specific state. But it's pretty standard across the board here. If you see a huge jump between one to another, it's worth mentioning. But for the most part, you should see kind of all the same stuff on this B side here. C is usually going to be kind of all your title fees that you have, title fees, inspection fees. So a lot of this is, if you're getting a refinance on loan, you can pick your own title company. But if you are, buying a property, it's usually the seller who picks the title company. So you're kind of shit out of luck with these services, at least the title-based services, because it's going to be whatever title company they pick, most likely, if you're the one buying the house. But if you're refinancing, then the title company can be up to you. So taxes and other government fees, this is going to be standard across the board. So that's going to be all the same. Prepaids, that's your insurance premiums that you need, your taxes, then the interest you have on your loan. So they calculate that, if you close on, say, the 15th of September has 30 total days, so you're going to pay 15 days of interest for that September loan. So that's what prepaid interest is. So they're calculating that $17.44 per day. That's how much you're paying in interest for the loan. So they're saying that over 15 days. And then escrow is just how much money they keep inside, in case you were ever to miss a payment or something, or if insurance or taxes raise, they're going to keep some escrow aside. So that's going to be different from lender to lender, how much they decide to keep in escrow. And then owner's title policy, obviously anything can show up in other. But what this is to say is that total closing costs, if they go and they have, like $4,000 here or something, a lot of that can be that they just didn't name stuff in here. Stuff that you are going to pay for. So some lenders are just shadier than others. So when you go through and you're checking this A, know that that's the real argument that you have. Is, hey, I have a lender that charges me $1,200, you're going to charge me $1,800. That's the big negotiation thing. So if you have a broker you trust, the rest of the stuff is not so much not negotiable, more like stuff that they can hide inside of the mortgage industry. So all this stuff can just pop back up, the services you shop for. They can make an estimate on the title company that's $1,000 off. because they're using an estimate of a different title company, and it's not the one you're going to use in closing, right? So these are just estimates that they have over here, and they're just going to give the lowest that they want to give. So don't believe all of these other things. Just the A is what they really have control over. E should be the same, B should be roughly the same. C is an estimate on closing costs, but that's going to be with whichever title company they charge. So you don't really control that. And then prepaids, that's a little bit negotiable in how much they're taking from a prepaid, but that's just different from lender to lender. And then same thing with escrow. So now you guys, hopefully you can help understand what costs you're going to have inside your loan when you're comparing loans from different lenders. So now you kind of know your fees, plus obviously, if one has a 7% interest rate or a 6.5% interest rate, the difference that is. Know that the difference in interest rates can be just because you decided to pay more points. If you pay more points, you can lower your interest rate, and vice versa, pay less points to have a higher interest rate. So if you have a broker that you trust, communicate with them, that tell them, hey, I got a better loan than this one. And a lot of the times, they're going to want to keep you in your business. But do your due diligence, make sure you get other quotes, and then you can help actually determine who you should get your loan with. So see you later.